Even though there's a lot of Forex strategies out there, there's one that I consider to be the most viral at the moment on my YouTube channel, not only because it's the easiest one, but also because it's suitable for beginners and is super accurate. So in this specific video, we're gonna talk about the best SMA strategy for beginners in Forex. Hi everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. In today's video, we're gonna talk about this specific SMA strategy. I'm gonna give you a full tutorial as to how to use it, what to avoid, and some extra tips that are going to help you to make money online. But more importantly, if you're very new to my channel and you're into binary options, Forex trading, crypto trading, or any type of making money online, this channel is for you. Make sure you hit that subscribe button below, as I do a lot of software reviews, broker reviews, and just like this one, I give you tips and strategies as to how to make money with online trading. So if you're new here, consider subscribing. With that being said, let's jump into the video. All right, and before I actually jump into this video, I just want to give you a warm invitation to a link that I have in the description that is blwonlinetrading.com/opportunity, where I'm going to have this week a webinar where I'm going to teach you how you can make money while you're actually learning Forex as well. So the invitation is right there. Take that free webinar. It might help you get some extra income to your wallets or to your bank account. So that invitation right there, let's go ahead and dive into the strategy. So I'm over here on my trading view account and I'm on a 15-minute charts, and we're not gonna need this either. So what we are going to need is very simple. It's just one moving average, simple moving average. That's why it's called SMA moving average, or SMA strategy is a simple moving average with the period of 50. With that moving average, what we're going to do is that we're going to identify the trend. So the way this strategy works is pretty damn simple. And right now, I'm gonna break down like what are the things that you need to do in order to set the strategy. So let's dive with the settings. The first setting that you need to add, let me just go ahead and change the color to black one, and this one is to add the moving average with a period of 50. Where can you add it? There's one thing called indicators right here on the trading view account, and you can go ahead and choose the indicator right there. You just click on it and you find it. It's just moving average, right? Moving average, right? Not exponential moving average. So that's the first thing that you got to do, and is this red line that you can see right here moving around. The second thing that you need to do is actually find the chart, the time frame that you're going to be using this strategy for. Now, there's no specific time that you need to use the strategy. I want to say that up front. The best time frame doesn't exist. If you're asking, hey, should I use this in 1 hour, 4 hour, 1 day, it really doesn't matter as long as you use it from 15 minutes and above. I don't recommend it for 5 minutes because it's too volatile, so it's kind of complicated. But if you use it in 1 hour, you will have less signals, more pips, and so on. But right now, at the end of the video, I'm going to tell you why there's no difference whatsoever whether you're going to use it in 15 minutes or 1 hour, if you're going to be placing a trade for 1,000 pips or a trade with 20 pips. It doesn't make a difference, but I'm going to tell you that at the end of the video. Right now, let's go ahead and dive into the part number 2. The part number 2 of the video is to identify what is the trend. Now that you already have the moving average, you need to understand what is the trend of the actual pair. So for instance, right here, you can see that this is a downtrend, this is the downtrend, and this is the downtrend. How can you identify whether it's a downtrend or not? Very simple. All you need to do is identify where the moving average of 50 is going. This time is actually going down, and how far the actual moving average is from the candlestick. So if you notice, there's a slight distance in here, and that's exactly what we are looking for to identify the trend. Now, this specific strategy though is based on change on trending. Okay, so what we need to look for is actually a change on the trend, and instead look for opportunities for a change in all that trending. So what we're gonna do right now now is that we're gonna identify the change on a trend. Now, how do you do that? Very simple. If you notice this candle right here, I actually explained this on a different video, but I'm gonna give you a brief explanation on this one as well. Whenever the moving average with a period of 50 gets touched by the candle, whether it's going down or whether it's going up, it means that there might be a change on the trending, on the direction. So what you need to do is to look for 3 different factors in order to enter a transaction. So the first factor is that the candlestick closes above the moving average. So if you notice, this was a downtrend, right? But a bullish candle actually closed above the moving average. Now, this is the first indicator. The second indicator is that the next candle actually closes without touching the moving average, like it did right here. It didn't touch the moving average. And the third confirmation is that the next candle or a future candle closes above the highest of the previous candlestick. So right now, as you can see, this is the highest. This right here is the highest of the previous candle, and this one is closing below. So we can't enter that position, right? We need to wait. We need to wait because this one can still retract and not respect the change on trending. But what we're looking for is a clear confirmation that the price will continue to go up. Now, we're going to jump and see a change on trending so that you understand. Like for instance, this one right here seemed like it was like a slightly uptrend, but here we're gonna see if the conditions were actually met. So the first condition is that the candlesticks closes below the moving average, right? Then we're looking at a candle that closed and it never touched the moving average. So that's the second confirmation. And the third one is right here. If you notice, this is the lowest of this candle, and this candlestick closed below the lowest level of the previous candlestick. That means that in here we have a good entry point. Now, how is it that we're going to enter this point? We're going to enter a short position at the closing of that candle. That was the third confirmation. And we're going to set the take profit and the stop loss. Now, in this specific part of the video, I want to give you 2 extra confirmations for you to actually enter the trade. Number 1, the awesome oscillator. As you can see, this right here indicator is an awesome oscillator. Now, this works on waves, right? It shows you when uptrends and downtrends, but the most important thing that you need to notice is that in this area, as you can see right here, where you're going to start the trade, there was a crossover on the awesome oscillator. So that means that the price will continue dropping. How much is it going to drop? This is another extra tip. Use the ATR. ATR, or average to range, is an indicator that you can also get right here, the average to range. You just add it. Now, what is this this indicator do? Well, this is very simple. It gives you this specific average. Now, this average is the average amount of pips that each, like the last 14 candles have had. So what is it that you're going to do? So if this shows right here 0.00065, the last decimal does not count. This one does not count. So this number 6 is the actual like average pip range of the previous 14 candles. So when you're actually setting up your trade, this is super important because you have to set your stop loss at no more than double what is the average to range. So meaning that right now it's actually 6, for example, of course, then your stop loss should be around 12, just right there, around 12. Now the take profit though, the take profit, you can set it for the next resistance level, support level, or so on. It's really up to you. So if you notice, by following these 3 indicators, you can see that this was a deep one transaction. So how is it that you're supposed to enter the trade? You enter at the closing of the candle. That was the third confirmation. Okay. Hopefully you guys can catch me up. If you think I'm going too fast or something like that, make sure that you rewind the video so that you fully understand that. We're gonna look for an uptrend confirmation here. Okay, let's go ahead and take a look at this one. It looks beautiful right here. So again, we're gonna look for the 3 confirmations, right? So the first confirmation is that the candlestick actually closed above the moving average, right? Now, the next candlestick closed without touching the moving average, but we have no confirmation whatsoever because this candle right here didn't close above the highest, this one either, but this is the highest of this candlestick, and this one closed above the highest of the next candlestick. So we don't enter here, we enter at the end of this candlestick, which means right here. Now, how is it that we're going to do it? We're gonna get a long position right here where it closed on the next candle, boom, this one right here. And again, we're gonna go through the awesome oscillator and we're gonna take a look at what is the trend of the awesome oscillator. Obviously it happened in this area, so that's the reason why the change of trending, but it's still going on an uptrend, so we're still safe to go. And more importantly, we're gonna take a look at the average true range. Right now it shows 6 like by default because I'm not looking at a replay or anything. I'm actually just, this is what's going on right now in the market while I'm recording this video, but you need to see what is the average true range of the specific moment that you entered the transaction. So now that you already know, what you need to do is that you need to set for 12 pips like it is right now, 12 pips in stop loss, and the take profit can be managed differently. For instance, here is a good resistance level, so you can take it all the way over here and you will be making 18 pips in profit and risking 12 pips. If you notice, the trade actually started going up. It almost hit the target, but then it went down and it like kind of freaked people out maybe, and then boom, it hit the target. Now, since we're looking at a 15-minute candlesticks, this took what, like about 3-4 hours pretty much or something like that, I'm not sure, but this is how the strategy actually works. Obviously the strategy is not 100% accurate as any strategy in the world. It has its flaws and so on. Like in this one right here, I actually had set the actual long position in here, but I haven't entered the transaction because I'm not sure, but this candle needs to close at least in this area, or the following candle needs to close above the highest of the previous candle. So I'm just waiting for that confirmation, but overall I think I covered my point, and hopefully you understand like all of the combinations between moving average, awesome oscillator, and the average true range, so that you fully understand like, hey, you know what, this is what how to set the stop loss and the take profit as well on your trade. So my biggest recommendation is that you actually test this strategy on demo. As a matter of fact, right now I enter a few trades. They're gonna take a while, but I'm actually entering a few transactions right here using this specific strategy. So hopefully we can win those trades as usual. And more importantly, remember, why is it not important if you actually target 20 pips against 1,000 pips? It's not a big difference. Why? Because this is the most important thing, the stop loss level. This is the most important thing. Why? Because when you actually put in your stop loss level, you need to make sure that you're risking no more than 2% of your balance. Now, based on this risk, on this loss level, is when this comes along. So for instance, if it's 1-1, like the risk reward that you're watching right here, that means that if I win it, I will win 2% of my balance. Now, this will not be determined if I make 14 pips like I'm targeting right now, or if I make 2,000 pips. It makes no difference whatsoever. So what makes a difference on your target or in your profits is basically the fact that you're entering a trade, like you're entering the 2% risk at the most on each specific trade. So if you're entering in a let me give you an example. If I actually change this take profit to this area and I'm targeting 33 pips, but if you notice my risk reward, it's 266. So that means that I will make 5% profit from this specific winning trade if I win it, but that's only if I win the transaction, and because I'm not focusing on the number of pips, because I can make the exact same amount of money, 5% increase, if I target 1,000 pips on a daily chart that if I target 33 pips on a 15-minute chart. So I hope this really makes sense, and if not, like I said, try to rewind the video. But more importantly, if you guys want to make sure that you try this strategy on demo, as you notice right here, it's happening, the momentum is actually happening. So try try the strategy on demo. Let me know in the comment section below if you have questions, and make sure you give the like on this video. Hey, thank you very much for watching this video, and if you found value on it, make sure you smash the like button. And more importantly, if you have any questions, you can put them in the comment section below. I'll be glad to answer those comments as soon as I can. And thank you for watching this video. Don't forget to subscribe and smash the like button, and I'll see you on the next one.